All right. Well, it was a big week for economic data. It has been a big week. The August Consumer Price Index showing an increase of 8.3% year over year. The Producer Price Index showing a slight decrease month over month, but a year over year increase of 8.7%. Meanwhile, we got retail sales yesterday up 0.3% month to month. That was for August, 9.1% year over year. Joining me now, former Reagan economic advisor and Taxes Have Consequences author Art Laffer. Art, good morning.
Good morning, Cheryl. How are you this morning?
I'm good. It's good to see you. I was better before the CPI read this earlier this week. But let's talk about this because the Fed, obviously, the meeting is next week. All eyes are on that. They start Tuesday. We get the decision Wednesday. We were talking on set during the commercial break about, is it going to be 75? Is it going to be 1%? What do you think?
I don't know what it's going to be, but they should do. I mean, it's not a good set of numbers coming out. The core inflation has not declined at all. I mean, not at all. And you had this big boom in oil prices, which pushed the CPI way up. I think it was 9.1 was the high. And then when those oil prices and other spot commodities came down, it came way down as well. But baseline, base core inflation is continuing on, and there's no signs of it not continuing, and there are no policies in place that would stop it. So I would say the Fed board should be extremely concerned about the prospects for inflation in the U.S.
Yeah, I want to bring in John Lonsky because, John, you and I were just talking about this on set, that, you know, there's, look, a 20% chance the Fed could raise rates by a full percent. That is being talked about, to be clear here, John.
Yeah, it's being talked about, but in all likelihood, it's going to be a 0.75 percentage point hike that brings Fed funds up to 3.14%. About that, the highest since 2007. And my question for you, Art, is whether or not the U.S. economy has the ability to shoulder much higher interest rates for long. You know, I can't help but think that we're coming to that breaking point where a recession is practically a sure thing at some point in 2023.
Yeah, it already was a thing in 2022 as well, John. I mean, you got it here. The economy cannot afford to have the Fed not respond to inflation. They have been controlling interest rates, and price controls do not work. I mean, when Volcker did it, he let the interest rates go way up. I think the 10-year during the 79-80 period was something about 14–15%. You would never, ever, ever economically buy a bond that yields 3.5% today. You just wouldn't do it. It's not economical. It doesn't make sense. And the Fed, the only way they can keep those rates that low is by adding on to their balance sheet, which is what's causing inflation. So if they want to get things done, stop the price controls, get rid of the balance sheet or reduce it dramatically, and let markets settle where they should settle.
That's a good point.
I think that would entail a decline in the economy as well. But that's what's needed.
Well, that's what's going to happen, Art. I mean, obviously, we know that the flip side of this and the sad side of this is that the economy is going to get destroyed. John, you're raising.
Yeah, I want to add this point, and that means that if we continue to have rate hikes in the midst of a worsening economic outlook, stock prices can only go lower. Any reason to think otherwise? Might we set a new low for the U.S. equity market later this year?
Yeah, I think so. And with the inflation, if you look at the equity markets and deflate them for prices, they've been down a lot more than they are right now. I mean, it's like taking a puppy's tail off 1/4 of an inch at a time. If you're going to do it, must be quick. Rip that bandage off, get it done, get the economy back on track, and then things will improve. But these politicians who sit there and cheer and celebrate the passage of their bills, they're not going to cheer and celebrate the consequences of those bills later on.
All right. Well, nobody touches puppies, Art Laffer. Nobody. But listen, I want to bring in Tiana Lowe. She's with me on set as well.
Hi, so I just want to ask about, you know, at the end of the 08 recession, there was a lot of reflection and possibly overcorrection when it came to both the size of stimulus. You know, we went from TARP to trillions of dollars here, and also this idea of full employment. Janet Yellen celebrating full employment, saying finally now we can tackle inflation because we've reached full employment. That was so ephemeral in 08. Oh, full employment. Is that what we have right now? And now that we see it, now that we see sort of, you know, breaking the Phillips curve, is that something we ever want again?
Yeah, full employment I would describe, and I would describe it in terms of the participation rate, not in terms of the unemployment rate. That's just me. And our participation rate has dropped dramatically. People have left the labor force in droves, Tiana, because of the stimulus spending that you were describing. But just hold back for a second. They call it stimulus spending. But have you ever heard of a poor person spending himself into wealth? Government spending beyond what they should be doing, courts and roads and military and that stuff, is not stimulative. Government spending is taxation. So all stimulus spending does lowers the secular growth rate of the United States. We are becoming Japan. We are becoming Europe because of what we call stimulus spending, which is nothing more than placing additional burdens on the economy.
Absolutely. Oh, Art Laffer, your shot's going out a little bit. Stay with me because I absolutely agree with you, Art. I absolutely believe that you're right. Stimulus spending has led to inflation, and you're right. The Fed needs to shrink that balance sheet. Art, if you're still with me, I do want really quick to get your take on this.
I am still with you. Yep.
Okay, just checking. President Biden took this victory lap in the Rose Garden yesterday. He is celebrating this deal that avoided a major railroad strike. You know, then he claims the agreement's going to cut soaring food prices. Art, listen to this real quick.
Mr. President, grocery prices are up over 13%. What do you tell struggling Americans?
Rail's moving, it's not going to go up.
Art, your reaction?
Well, I didn't hear what he said about what's not going to go up, but the railroad strike thing reminds me of going back to the 60s and 50s when we had strikes all over America. They were all over the place. We are coming back into an era of a big labor union economy and government that's going to cause all sorts of problems going forward with unions and businesses. And Biden is leading that contentious model and that contentious world.
Yeah. Art, I mean, it is a mess. I wish they would listen to you. Great points from you, as always. Art Laffer, thank you, sir. It's good to see you.
Thank you very much, Cheryl. Thanks, Judge. Thanks, Tiana.